morning. My name is Frostad. I'm the president and CEO of Purepoint Uranium Group Inc. We're an exploration company operating in Canada's Athabasca Basin. We have a fairly significant portfolio of projects there, two of which are joint ventures with two of the largest uranium producers and suppliers in the world. So we're happy to be here today to talk to Merlin.
Chris, thank you very much for the introduction. Good to be talking to you. It's what a terrible market, huh? I mean, there's a buyer's strike, there's a capital strike. Everybody's under pressure, but Purepoint's been around for 20 years. You've been running it for 20 years. You've lived through these cycles before. Talk to me a little bit about how you adapt to the downturn so that the company survives and kind of lives to keep fighting.
Yeah, well, and actually it goes back further than that because I was in tech for 15, 20 years back in the internet days. So the roller coaster rides are something that are a bit of a norm for myself and many of the people around us. But it's been an interesting 3 years because it's, after 10 years of languishing in the uranium markets and kind of waiting for the price to come back to a point where people could start opening up mines again. During that time, we buckled down, kept our powder dry, kept our projects safe and maintained, and did the work that we needed to do to keep ourselves active during that time. But in the last 3 years, it's been interesting. We saw back right at the end of 2020, I guess, the world got excited about uranium again. We started to see supply tighten up. And the spot price of uranium go jumping up again. But I think as much as and I think a lot of people understand the underlying mechanics of the uranium markets. It's a small market. It doesn't take a lot of money to push it around for the most part. But around the time when Fukushima went out and the tsunami hit Japan, we saw that there was quite a significant overhang in uranium supply. And so during the last 10 years, we've seen a lot of production slowed down or stopped. We've seen that price of uranium sitting well below incentive levels to turn a mine back on, and things tightening up again. And over the last maybe 5 years, 6 years, we've been producing 20 to 30% less uranium than we actually consume. So as things turned around about 3 years ago, everybody got excited about it again, knowing that the price of uranium had to go from 25 up to $65, $80 a pound. We saw a lot more money come back into the markets, and we've, but to your point about the ups and the downs, I think we saw about a 16-month run of excitement when all of the uranium equities went on a bit of a tear and a lot of capital was available. But the price of uranium peaked, I guess it was April of last year, at a little over $60. And then it came off a little bit, and it's been sitting there ever since, down around $52, $55. And as a result, over the last 16 months, we've seen equities drift back down. Uranium equities, in particular, drift back down as the market kind of sits back and waits for things to happen again. So,
but it's been a pretty savage pullback in terms of the uranium equities. I think that what happened to the uranium equities is that they suddenly, within a very short space of time, there was a lot of money trying to get into a very small sector.
Right, that's right.
And what happened, to my eyes, is that it seems as if the equity market was pricing in a uranium price of over $100 or kind of $150. Or, it was the value of the stocks had risen so sharply that when the uranium price underneath started to slow down or actually give a little bit back, there was a lot of unwinding to do, again, in a relatively illiquid sector. And there was also the backdrop of the wider resources sector downturn over the last 3 years. So base metals, gold, it's all been pretty tough for the last 2.5, 3 years. And so I think uranium stocks have been caught in the downdraft. Did you ramp up? Did you do a capital raise, and did you ramp up your field activities in that 16-month period?
Well, absolutely. I mean, that's what we do, and that's what you have to do. I mean, the exploration side of things is a little more volatile than the others. That is to say, producers, developers, explorers. When uranium took off, we all kind of rose with the tide at that time, and a lot of money was available. And that's the time when we have to, take the money and get back to a lot of projects that we've got. And we did. We took that opportunity to raise adequate funds to get back out and open up a number of projects that we had sitting under a sheet for 8 or 10 years. And that was a good thing, and get those things advanced. But as things come off again, you've got to slow back down. And
when did you? How did you make that? When did you make that decision? Were you a year ago? Were you saying, right, let's dial it back. Let's look after our cash balance.
Right. Well, we make sure that we're never committed in a way that forces us to spend money we don't want to spend. And that is to say, we watch all of our projects and make sure that we're spending money. It's not just always about what's that next hole and what's that next big hit. We have to make sure that we're equally maintaining our projects along the way and hanging on to them in case we haven't got enough money to go back and work on them in another year or two. So that becomes a priority. The other priority is making sure that our staff we've got interesting ways to we've got interesting ways to hang on to our staff and keep them busy and keep them active. So it's really setting ourselves up in a way that we can dial ourselves up and dial ourselves down. So as we see money not becoming available, we had a lot of money available early in the year, and we went out and did a fair amount of work. We thought we'd probably be able to raise more money in the spring and get back out and do some work this summer and the fall, but the markets were not riding at a level that we were happy with. So we were able to put things off and do different work. We're still out in the field doing some reconnaissance, doing some prospecting, doing some sampling, doing things we have to have done in order to get out there with a drill next, and maybe some geophysics. But we're able to dial it up and down, with very little notice, and that's the way we've set things up here.
And where does that leave in terms of the kind of ability to provide catalysts that are going to change the fundamental value of the company? Because effectively, all exploration companies are kind of, or pre-discovery exploration companies are out there looking to make the transformational discovery, the value through the drill bit. And what options have you got with a limited work program?
Well, it depends on the time frame you're talking about, right? So we, to your point, the catalyst is always a discovery of some sort, and we were talking about it earlier. But the obvious one was F3 last November, December. Who has been doing the similar things we were doing. They've got a fairly sizable portfolio. They're doing the work on a regular basis. They're prioritizing their opportunities and raising money and ticking along nicely, and advancing those projects. And then last November, they made a really good discovery out near our Hook Lake project, and stock price went up 575%. That's what we're all looking for, is that sort of a hit. But you have to be there to do it. Like, you can't, and we see too many companies out there kind of blowing the brains out too quick and too early, and promoting too quick and too early things that aren't necessarily there, and that cliff comes at you kind of fast. So we make sure that we've always got work in the hopper, that we've always got things that we can talk about. Our biggest opportunity right now is Hook Lake, which is our joint venture with Cameco and Orano. But again, as I said before, our partners pace us in terms of how we can go out and do things. We were moving into what looked to be a fairly significant mineralization zone at the end of our drill program last season, and where we would have typically kept marching on. Our partners say, okay, that's enough for now. Let's digest what we've got. Let's look at it carefully. Let's think about it and decide what we're going to do next. So, that's the other side of working with the majors. But you have to keep a pace, a reasonable pace. You have to keep looking, and you have to be able to dial it up and down. If you really blow your brains out, it's got to be a story that is still viable a year from now. And a lot of people don't do that.
Indeed, I've experienced that myself. Coming to the joint venture, is there on Hook with Orano and Cameco? I mean, obviously, Orano's got its own dramas in the background with what's happening in Niger at the moment. And how insulated is something like the Hook project? Do you have a kind of a budget that is set? Do you know what is going to be spent over the kind of 2-3 year time period?
Well, no. I can, we have a few things. First of all, the Canadian budgets for Orano and Canada, from an exploration standpoint, don't vary a lot from year to year in total. Also understanding that their focus is typically on identifying feed down the road for their existing mills and operations, which are on the other side of the province. Having said that, from an exploration standpoint, it's pretty clear that this is probably one of their, if not the most important opportunity they see to identify another Tier 1 deposit, because they can't really release a budget for anything that doesn't seem to have the opportunity to come up with 100 to 150 million pounds. So the fact that they do keep financing and funding this project, moving it forward, it alleviates the need for us to kind of validate this in some other way, shape, or form, because they're doing that for us. So how the budgets work, we typically around this time of year will start to talk to them about how much money they think they want to put in the budget, how much work they think they want to do. And we will start, because we are the operator on the project, we'll start putting together proposals in and around that budget range. We have formal meetings in late fall where we'll present to them where we think we should go next and how that money should be spent and what we think should be spent. And then by the end of November, it's all approved and we move forward in that sense. So that's kind of the process we go through.
Are you not tempted to kind of come up with a work plan and kind of lay out the catalysts, the value catalysts that could be created if you drill this X amount of meters and say, listen, this is what we think we can achieve if we drill this amount of meters, this meterage. This is the budgetary.
Well, we give them a broad range of choice. Believe me, we're shooting for the high end, and they are good partners from a number of aspects. I mean, when we have these meetings, it's not just 3 or 4 of us sitting there. There are there's a dozen of them out there. Like they heard all of their geologists and geophysicists and who on into the room, and it's a very good constructive meeting as to what we think we're looking at and where we think we should be going next, and we take all of that into consideration.
Do you compete for the exploration dollars with their brownfield exploration on the eastern edge of the Athabasca?
Yes, we do. We do, absolutely. We've run into that a few times. But they understand the importance of the project. They understand the importance of the project to us as well. They understand that if they just walk away from it now, it's going to be very difficult for us as a partner to raise money on it down the road. So, but our budget's fluctuated from $1.5 million to $5 million, depending on what's going on out there and what's going on in each of their backyards as well. As I started out saying, there is definitely more of a tendency to want to work on exploration projects in the east where their operations are. But they see this as probably one of the last untested areas in the basin to possibly be finding a deposit of the size that they'd be looking for. So they will continue to keep it advancing and moving forward. As a matter of fact, they're looking at, we're now getting a budget, which we haven't for a while. We have another project out there called Smart Lake, which is a joint venture just with Cameco. We own 27% of that. And, 10 years ago, we hit uranium on our first hole out there. But then everything lit up over at Patterson Lake and all the attention moved over there. So probably for the first time in a lot of years, we've been asked to put together a budget and a proposal to get back out there this year and start moving that project forward. So it's a very good relationship we have. It's not, we just don't get hammered or told what's what. We know everyone well there, and they know us, and it's just very comfortable in that regard.
What was the Hook Lake budget last year, kind of roughly, dollars wise? You gave a range.
Last year was a small budget. It was about $1.5 million, because it was a new area we were testing. they wanted to, again, we've got these corridors out there in the Patterson Lake. If you're familiar with that, that's the one that runs up from fission uranium up through NextGen and up onto our property, has really been the focus of most of the historic drilling. And there's another corridor just to the west of it that's actually closer to the heat source. And we haven't tested it. Well, we tested it 10, 12 years ago and actually found uranium there as well. But we were looking for a nonconformity. We were not looking for basement hosted stuff. So we back there for the first time this last year. And we only drilled 6 holes. We started in the south because there's a lot of conductors out there. We were doing 400, 800, 1,000 meter step outs, right? We weren't doing close drilling to get our first tests. And as we moved to the north, it was really on our last hole that we started to come into, the uranium and the boron and all the good things that we now understand, is kind of the edge of good things. And that's where it closed off because that was the budget. So, yeah, that was last year. So this year we're looking at a bigger budget. We're looking at a more at a tighter program, and to really follow up on where we left off last March.
And you mentioned earlier in the interview, you mentioned that you have some innovative ways of keeping on to your staff. Holding the technical team together. I know only too well how difficult it is to keep a team together in a downturn when your G&A budget has to shrink. You have to let go of people, but also the technical team that you build up in the good years or over time is very much kind of the core of the identity and the professional ability to explore of an exploration company. So, can you just talk me through some of those methods or those tricks or those techniques that you use to keep your team together?
Well, it is important because if you're taking people out of school or early in their career, they have a lot to learn, and you want to learn. You want to show them what they're how to go at this, and so you spend a year or two training somebody up in the good times, and then you have to let them go. What we've done to kind of mitigate that, we've done a few things. Number one, is I guess the way that we pay them. They're employees, and we guarantee them an appropriate minimum amount of compensation in a given year, but we pay them based on the days that they're in the field, the days that they're in the office. So when we're really, really busy, these people are making a ridiculous amount of money, and when they're not, they're not. But they understand the rules of engagement when they come in, and that all works for them. Sometimes they're going to take a month off if that's the situation, but they spent 3 months living in a hut, so they get to do that. And so that's one of the things we do, is we make sure that we're compensating them in a way that allows that sort of flexibility to turn the dial up or turn the dial down. The other thing we've done in the past, which allows us actually to overhire a bit, is to make upfront arrangements with other small exploration companies that can't go out and rent a seasoned geologist for a 3-month program. And in that way, we literally rent out some of our staff to these projects, and which works for everybody. It means that they're getting paid even more because that just directly goes back to the staff. It gets them involved in different projects in different parts of the world and in different commodities, and so it's worked out very well. And what it's allowed us to do is keep a fairly core, solid team of geologists who understand what we do and how we do it well, while at the same time, you're not going to see it in my income statement. It's not we're able to dial it up and dial it down. And those are the sorts of things that you have to do as an exploration company to make sure that you're riding that roller coaster and it's not a bumpy ride. It's a smooth ride.
Yeah. Interesting. Thank you. I might use that trick myself. Good. So let's here we are. The equity markets are terrible. It's risk off. China's slowing down. There's no sign of a turn any point. Just look at what's happening in the dollar price of gold or copper or pretty much any commodity out there. And yet we have this ongoing situation where the uranium prices are strong, and as you mentioned, there have been so many closures, and the annual demand is greater than the annual supply, and so eventually there's a bite point where the uranium price will get traction again. Do you have any feeling of when the equity market will turn, or when the uranium price will turn? What does your crystal ball say?
Well, isn't that the $1 million question? I mean, how many people tried to answer that question over the last 12 years? But I mean, what keeps things strong is the fact that we know in our heart of hearts, to your point, there is a bite point. There is a tipping point where it has to turn, because, at $56 uranium, it might as well be $20 uranium, because you're not going to turn a new mine on. So we all know that the underlying thesis here is that at some point, supply and demand will take over, and you'll have to turn on a new mine, and the price will have to go up to $75 or what have you. And that's kind of, I think, what keeps the uranium market strong, because we're continuing to see more reactors, and we're continuing to see countries turn their policies around to support nuclear. And so it's on an upward swing. And I see people that are looking at the uranium market where they used to look at it as, okay, I'm going to wait till I get this pop and then I'll get out of it again. They're now seeing it as a longer term play, because uranium is becoming that important as a longer term play. So when do we see it happening? I don't. It's like I say, it went up. The price of uranium went up for 16 months. It came off a little over a year ago. It's been sitting flat for the last year and a half. I think the last this year alone, the average spot price is around $52. It's now at $56. So it's just been slowly creeping up. Not fast enough for anybody's love, but it has kept uranium equities stronger than, to your point, a lot of the other commodities that are not getting that kind of love, that are not getting that kind of ongoing support, because we know it's going to get better at some point. So you've seen, the producers are doing well. They came off like everybody else, but, they're sort of following the spot price now. And I mean, Cameco's at a 52-week high. The developers came off as well, but, their landing is a little softer than most, because again, they're playing a longer term story. The equity or the exploration companies, are now hopefully, we're all sitting at that low point. This is where me as a promoter has to say, okay, buying opportunity. But anyway, let's
to that. I mean, if you look at your share price chart over the since Fukushima, it's pretty much been range bound between 3-4 cents and 16, 17, 18, maybe 19 cents. So hasn't had a breakout. What do you put as the investment case for Purepoint?
Because a breakout only really comes on discovery. Really, we've seen other people break out, but it lasts all of 5 or 6 months until people realize that it wasn't really a discovery or something to that effect. So, and I think the reason that you'll see us being relatively stable in that regard, and following the ups and downs of the spot prices, a lot of it, I think, had to do with our relationship with Cameco and Orano. They sort of validated our existence and what we were doing. And we were able to, continue doing good work and had some news flow during that time and raise money as we needed it here in Canada. But again, a breakout only comes from discovery. And discovery comes from all the things we've talked about. You've got to be doing the work. You've got to have more opportunities than two, right? This isn't, it can't be a Hail Mary. And there's only a couple of us doing better than the average these days on the exploration side. And that's because I think if you look at us and you look at a couple of other companies in that realm, it's because we've got good looking portfolios. We've got opportunities. We don't need to spend money on them today, but they're there when the money comes back. We've got the people, we've got the relationships, and we're not, it's not a Hail Mary. We're operating and working in a solid, proper fashion.
And if I could add to that, you've learned how to survive. You've been through enough of these blasted downturns to be able to adapt and kind of roll with the punches.
Right. So I think right now, when is it going to turn? Yeah, last week. But when it does turn, you want to be there. And I think, right now we're looking at uranium equities probably as low, I would hope. I think they're all as low as they're going to get. Most of the exploration companies are lower than they were 3 years ago. So I think right now you are looking at the bottom of the situation. And, and at some point, be it a year from now, be it 6 months from now, a year and a half, I'm not sure, when it does move, and we all know it will move, you want to make sure that your money's in a safe boat, not having sunk 3 miles back.
Perhaps the best catalyst will be people saying that capitulating. When you see people saying, right, I'm selling all my uranium stocks, I'm out of this. That's the time to get back into it. Chris, thank you very much for the update. It's been a long time since you've been on Crux, but I guess that reflects the market. I hope that your swift return is a sign of the broader uranium market and the equity market coming back with a vengeance. So good luck with the work programs ahead, and hopefully catch up with in the months ahead.
Great. Thank you very much, Merlin.